I would like to recognize Butch Wallace, who's here with us today. He's the District Director for Congressman Joe Wilson. Butch, where are you? Raise your hand. There he is. Thank you so much for coming out. Today you're going to be hearing from Vice President of National Association of Realtors, Elizabeth Mendenhall, and also the Association President for Central Carolina Realtors, Laura Derrick. I am Rusty Garrett. I'm the President of the South Carolina Association of Realtors, and again, welcome. We're all here because we understand the importance of protecting home ownership, a very important part of the American dream. You know, the ability to own a home is vital to hard-working individuals and families throughout America, and many right here in our home of Columbia. For decades, the government also recognized the benefits of home ownership and even showed long-standing support for policy surrounding the housing industry. Unfortunately, home ownership has recently come under attack in Washington. Policymakers are currently considering changes that could impact the ability of individuals and families throughout America, including many in South Carolina, for them to be able to buy, sell, or own homes today and in the future. But that's just a very brief overview. I'm happy to introduce to you Elizabeth Mendenhall, the 2011 National Association of Realtors Vice President, who's going to discuss an issue that hits very close to home for all of our South Carolina residents. Elizabeth?
Thank you, Rusty. The National Association of Realtors is honored to be here in South Carolina today. Home ownership is critical across this country, especially here in South Carolina, but across the board in all of our states of this great nation. We are concerned today about home ownership. Behind me, you'll see our Home Ownership Matters bus. Home ownership matters for so many reasons. It is critical and vital in our communities that we have individuals who value the American dream and home ownership. Our homes are places where we celebrate. Our homes are places where we live our lives. It's where we spend the time with our families, the ones that we love, and we celebrate those great moments in our lives. That's why home ownership matters. And on behalf of the National Association of Realtors and the over 1 million realtors across this country, we are proud to be fighting for the American dream and fighting for home ownership. In just less than 2 weeks, FHA loan limits will revert backwards, making it more difficult for buyers, especially first-time buyers, to own a home. If Congress does not act by September 30th, FHA insured loans will reduce from 125% to the local area median to 115%. Reverting to the lower rates will impact 669 counties and 42 states. The District of Columbia with an average of a loan limit reduction of $68,000. In some parts of South Carolina, like Beaufort and Jasper County, reverting to the lower limits will reduce the FHA loan amounts by more than $41,000 from $387,500 to $346,150 after September 30th. That will cripple this market in South Carolina. If the FHA loan limits revert back, not only will home buyers be impacted, homeowners will have a tougher time selling their home because there will be fewer buyers who will qualify to purchase these homes. If that doesn't make home buying hard enough, there is another barrier that qualified borrowers must face if Washington has their way. Let's talk about, what does a qualified home buyer mean? The VA loan program, which is intended to help men and women who selflessly defend our country, has one of the lowest default rates in this country. In addition to having the lowest default rate, this program also requires 0% down, not a penny. So what does that tell you about assessing what a qualified buyer means? The National Association of Realtors wants everyone who is qualified and can afford it to own a home. We believe that assessing a qualified buyer is done in the underwriting of the loan, not by the down payment check that buyer writes. So why do regulators in Washington continue to have conversations about the qualified mortgage rule that would require most buyers to come up with 20% down payment? Strong evidence shows that responsible lending standards and ensuring a borrower's ability to repay the loan is what has the greatest impact on reducing a lender's risk, not the down payment amount. I want you to know that the National Association of Realtors is working hard on your behalf as realtors, but on behalf of all of the homeowners in this country to fight against any policy which could negatively impact homeownership. To help further explain these policies, I'm proud to introduce the Central Carolina Realtors Association President, Laura Derrick. So please welcome Laura.
Thanks, Elizabeth. That was a great overview of some of the poor public policies that would prevent families from achieving the American dream of homeownership. But unfortunately, there's even more. In an effort to reduce the country's deficit, some policymakers are considering proposals that could include reducing the mortgage interest deduction for primary residences or even eliminating the deductions for secondary homes. It's ridiculous to say that the mortgage interest deduction is suddenly part of the deficit problem. The mortgage interest deduction has been part of our federal tax code for nearly 100 years. Reducing or eliminating the MID would increase the tax burden on homeowners, the group of Americans who are already paying 80 to 90% of the U.S. federal income tax. Throughout most of our nation's history, we've encouraged homeownership because it contributes to stable economies, to our communities. It supports families' wealth. It helps us as families being able to gain a foothold. In fact, 65% of those who claim the mortgage interest deduction are middle income earners. The ability to deduct the interest paid on a mortgage can mean significant savings at tax time. For example, a family who bought a home this year with $200,000 mortgage on a 30-year fixed rate, let's say an interest rate of 4.5%, could save nearly $3,500 in federal taxes when they file next year. Last year, South Carolina homeowners who benefited from the mortgage interest deduction took an average of approximately $10,000 in deductions. Think about what that type of money means to middle-income homeowners in this economy. It could be applied towards college tuitions, building up their savings, or using it to pay down their bills. According to a recent Harris survey, among South Carolina homeowners who currently take the mortgage interest deduction, 76% reported that losing that mortgage interest deduction would create a substantial tax burden on their families. In addition, among the South Carolina homeowners who currently take the mortgage interest deduction, 49% of homeowners in South Carolina indicated that the mortgage interest deduction was a contributing factor in their home purchase decision. We've got to keep housing first on the nation's current and future public policy decisions, with our agendas being foremost there. Housing and homeownership issues affect all Americans, including all of those of us across the state of South Carolina. NAR is working on your behalf in Washington and in your local area to encourage public policies that promote responsible, sustainable homeownership. Thank you for your time today, and we'd be happy to answer any questions.